Something strange happened in the market recently, and if you weren't watching closely, you probably missed it. Technology, the golden child of the last decade, quietly slipped while energy and healthcare quietly climbed. And that flip deserves your full attention right now. We're not talking about a minor blip on a Monday morning chart. We're talking about a rotation that shook portfolios built on the assumption that tech would lead forever and left a lot of confident investors staring at red numbers wondering what went wrong. The short answer is interest rates. But the long answer is far more interesting than that. When rates stay high, the future earnings that tech companies promise become less valuable today. Think of it like a gift card that loses purchasing power the longer you wait to use it. Energy and healthcare, on the other hand, make their money right now, not in some optimistic 5-year projection. They're the tortoise in a race where the hare just pulled a hamstring at mile marker 2. Just a couple of years ago, the headlines were screaming about artificial intelligence changing everything and trillion-dollar valuations like they were Tuesday lunch specials. Now those same stocks are getting repriced because the market is asking a very uncomfortable question. When exactly does all this promise actually pay off? There's a psychological whiplash here that even seasoned investors struggle with. Howard Marks has said that the market cycles between greed and fear, and right now the tech sector is learning what it feels like to be on the wrong side of that pendulum. History is actually full of these rotations. Energy dominated in the 1970s. Financials ruled the early 2000s. And tech had its first great collapse in 2001. Every time, the narrative felt completely unique, even though the underlying mechanics were boringly, almost comically familiar. The misconception most people carry is that a sector falling means it's broken forever. But that's like thinking a restaurant is permanently closed because the lunch rush ended. Sectors breathe in and out, and the smart money understands that timing the exhale is far less important than being positioned for the next inhale. What healthcare and energy offer right now is something investors in uncertain times crave, like comfort food, consistent cash flow, pricing power, and real-world demand that doesn't require a white paper to explain. People still get sick, and the world still runs on fuel. And those two facts are oddly recession-proof statements. The actionable lesson here is not to panic sell your tech holdings or pile into energy like you just discovered fire for the first time. The lesson is to size your positions with discipline, not with conviction. Because conviction is what gets people into trouble when the story changes faster than the chart. Process beats prediction almost every single time in this game. A disciplined investor who rebalances quarterly without emotional attachment will quietly outperform the person who had the hottest take on the right stock at the wrong moment. There's a certain irony in the fact that the companies promising to automate the future are being temporarily outperformed by the companies drilling the ground and managing chronic illness. The market, in its infinite and often absurd wisdom, is reminding us that the present still matters, even when the future looks shiny. At the end of the day, sector rotation is not your enemy. It's actually a feature of a healthy, functioning market that forces capital toward where it's genuinely needed. Your job is not to fight the rotation, but to understand it well enough to stay positioned rationally on both sides of it. Discipline, sizing, and consistency, those 3 words will carry you further than any hot take, earnings whisper, or late night scroll through financial social media ever will. And if you're comfortable with the uncertainty, that's not weakness, that's the mindset that actually compounds over time. If you're ready to take that disciplined, process-driven approach and apply it to real assets, whether that's real estate investing, home contracting, work, or finding the right lenders to back your next move, check out our links in the description below and let's get you started.